This is Zach together with Martin Wong, founder of iVSA. I would like to thank you for taking your time to watch this video. Once again, I repeat our disclaimer that the information provided is for educational purpose only. Any decision making should be at your own risk. In this Q&A section, Martin will answer a question raised by our followers, which is how to be a day trader. So Martin, what is day trading?
Now, like it or not, day trading, it's a very interesting topic. Intraday trading, sometimes they call it, is referred we buy and sell shares and only holding that position during the same day and at most carrying it overnight for a quick gain if the trader sees there's an upside from an overnight bullish US markets. Okay. Now, usually we see a lot of market volatility during the day. Example, good news where traders will buy early and exit during the day and typically close out after the market to reduce the overnight risk. Now, that's just one of the ways. Now, many traders like this kind of action as it is short-term trading and it reduces, like it or not, risk, especially overnight risk. If there is a bad news like the recent tussle trade war between US and China, and trust me, there is a lot of this kind of news that comes out overnight, especially when Donald Trump is in power. Now, there is an disadvantage to this. It's because the stock selection and the position has to work out during the day and it's gone. There's no tomorrow for any of this position. Meanwhile, the swing trader and the medium-term investor has the time advantage, a longer time frame, and it can work into their favor compared to day trading. Remember the trend. Much of the big gain and appreciation in stock prices come from holding slightly longer than day trader when we have a nice trend.
So Martin, any day trading tips or strategy for beginner?
Of course. Now, first of all, set aside an amount that you can afford to lose. Assess how much capital that you're willing to risk on each trade. Most successful day trader risk between 1 to 2% of their account per trade. Now, this amount is different from the one that you keep money for your basic living expenses. Do take note of that one. Second one, set aside time. Day trading requires your time to study as well as monitor your trades. Most of the day, in fact, doing trading, don't do it if you don't have the time. It is time consuming for day traders. Well, one of the reasons is because in day trading, traders have to track multiple stock opportunity and also have to read the market sentiment. That's why they look at charts. And this will arise at any time during the trading hours. Especially imagine you have a full-time job and day trading. A lot of hassle. That's why you need to move fast. That's the key. And third, start off small. As a newbie, it's always advisable to focus on a maximum of maybe 1 or 2 trades during day trading session. And if you have just a few stocks to look at, trading and finding stocks opportunity become so much easier. And then next is time those trades. Many orders placed by investors and traders begin to execute as soon as the market in the morning opens up, right? Example, and that's why these contribute to price volatility. A more experienced trader will typically look for patterns, will look at charts to recognize them and pick their entry point and exit point for quick profits. But if you are newbie, maybe it's just better to just stand aside and watch the market without making any move during the first 15 or 20 minutes a day. See what you like, right? The middle hours are usually less volatile and when the movement begin to pick up towards the closing bell. For newbie too, it is safer to avoid the closing hour. That's like the rush hour. And finally, be realistic about the profits they intend to take, especially newbie. A strategy doesn't need to win all the time to be profitable. Time and time again, I stated that many traders only need to win 50 to 60% of their trades. The point is that they have to make more on their winners than they lose on their losers. So make sure that the risk on each trade is limited, like what we say, to a specific percentage of the account and you're fine. And of course, having a trading plan, it's utmost important, where the entry and exit are clearly defined and written down. And also stick to the plan. Failure to plan is planning for failure. The market is fast and volatile. Successful traders have to move fast, and if they don't think fast or act fast, there is no chance of survival. Why? Because they develop many of these trading strategies, especially the experienced one, in advance, along with the discipline to hold on to that strategy. The fact is, it is far more important to follow your plan closely than try to chase profit. Again, plan your trade and trade your plan.
Okay, thank you, Martin. We are coming to the end of today's Q&A section. If you have any question related to the stock market, please feel free to WhatsApp us and we will cover it for you for subsequent weeks. Thank you for watching.